Hello, everyone, and welcome to the latest edition of the Sharesify Talk Shares podcast. I'm Stephen Frazer, and I'm joined as usual by my colleagues Ian Conway and James Crux. Hello, chaps.
Hey Steve, how are we doing?
Morning, Steve.
So, plenty to crack on with. Things I've been noticing in the market. You flagged it up first, Ian. Was the strange share price behaviour of Raspberry Pi? No, not something you eat, but that little computer chip company. What did you notice, Ian?
Well, Steve, Monday afternoon, we noticed the stock had sort of shot up about 20%, and it did about 25-30% again yesterday, and today it's up again. We're talking on Wednesday lunchtime, and the stock is up nearly 90% this week.
Yeah.
There's no official news on it. Simply, I mean, Bloomberg, various other news wires are saying that the market thinks there's a chance that agentic AI could be very good for demand for their small motherboards and small sort of built it at home PCs.
Yeah.
So
I mean,
who
it does
knows?
seem like a bit of a stretch, though, doesn't it? I mean, the other storyline that's been across the markets has been the CEO, Evan Upton, has been buying shares, and the market latched onto a share purchase. I think it's on the 16th of February, so this would be Monday.
Yeah.
And he bought £13,000 worth of shares. Now, that is hardly going to, we shouldn't be moving the needle. However, I dug around a bit and I've realised that since the 30th of January, Evan Upton has actually purchased more than £120,000 worth of shares in multiple different trades. So that's much more meaningful for a chap who earned last year, or sorry, in 2024, he earned about 1.2 million quid from LTIP and salary and so on. So, I mean, 120 grand, that's a pretty strong commitment into the future prospects of the business. So that seems to be a much more telling reason why the share price might have bounced. Why it should have happened, on a hairpin over 2 days is beyond me. I suppose in some ways it proves that the efficient market theory is a bit of a fallacy, because information does seep into different parts of the market at different stages. So I can just imagine a Monday afternoon, lots of fund managers having a good old meet up over lunch, and someone said, "Oh, have you seen Evan Upton buying shares in Raspberry Pi?" Everyone scurries back to the office, and suddenly loads of trades get triggered. So that might be the reason why.
Yeah, not the world's most liquid stock either. So if you did want to step in and buy, a similar amount, let's say £120,000 worth, it's definitely going to move the price.
Yeah. What else have you noticed, James, this week?
Yeah, I've had my eye on this applied nutrition, which is a sort of protein bars, creatine, that sort of thing. It's kind of demonstrating that it's a real business. And when it sort of came to the market, it had that kind of faddy look about it.
Okay.
Yeah, but it's delivering, a cycle of upgrades and sort of distribution, muscling its way into the high street sort of health retailers and grocers. And it's definitely one to keep an eye on, I think.
Right. So its products are actually getting into chains like Boots and Superdrug and whatever.
Yeah, and the discounters too. And I think it's one to keep an eye on. Also, these revelations about the latest Berkshire stakes, I think there's obviously a big story in the market with trimming the Apple stake and slashing the Amazon position as well. Obviously, it's sort of quite backward looking, but certainly a talking point.
Yeah, I mean, you've been manipulating his Apple stake for quite a while now. And in fairness, you can understand why. It's such a large part of the Berkshire Hathaway portfolio. So one shouldn't be so surprised, perhaps, that he's just erring away from being so exposed to that single stock, which has always been pretty counterintuitive for Warren Buffett to be so exposed to that one stock.
And then you have to ask how much of it is Buffett and how much of it is the investment guys, Todd Wexler and Todd Coombs and Ted Wexler.
Good point. Yeah,
because he's kind of stood back.
Yeah, absolutely. Ian, you were talking about, you wrote as well about a company that few people might have heard of, but they might have known the company it's trying to copy. This was Rosewood Partners. Is that the name of it?
Rosebank Industries, Steve.
Industries.
So we've talked about applied nutrition, a one recent IPO. We've talked about Raspberry Pi, and Rosebank came to market in just about 18 months ago, and there were high hopes because they have the same buy, improve, sell strategy as Melrose, and most of the C-suite came from Melrose.
Yeah.
So there was a lot of excitement when this listed. It came at £2.50. Stock shot to £9.
Yeah.
And about a year after listing, it announced it was going to buy an American company called ECI, and it issued £1.1 billion of new shares. So the stock price just cratered basically, and it
Yeah.
hasn't really recovered since.
Yeah.
They said on Monday they were looking to buy two US businesses owned by private equity, and therefore they might issue another 1.9 billion pounds of shares. So they went straight to the market, straight to the regulator, and said, "Can you suspend our shares?"
Yeah.
Because the market cap's only 1.8 billion. They're going to issue another 1.9 billion. You know what's going to happen.
Yeah.
But essentially, it hasn't really delivered. There was a
Yeah.
lot of
Yeah.
excitement when it came,
So,
as I say.
at this point in time, it's still a kind of a UK SPAC equivalent, I suppose.
Yeah, yeah, yeah. It's bought this ECI in the States,
Yeah.
electronic components maker. What they proposed cutting a quarter of the sites, the manufacturing sites, at a cost of $80 million. But the upside was only $30 million from doing
Right.
that, which
Right.
seems suboptimal to me. So,
Yeah.
the company's got a lot to prove when it reports. I think it's going to report next month. So it's got a lot to prove, and it's asking a lot of people if it wants to raise another 1.9 billion. It says it's
Yeah.
fully underwritten,
Yeah.
but obviously that means huge dilution for existing shareholders.
Yeah, yeah. I mean, it does sound to me like the best course of action might be for the more cautious investors to suck it and see, wait till it's actually made acquisitions, got an established business model, then see how it performs. Because that buy and improve element of it, it's not really had a chance to prove that yet in
No,
its
no,
current
not
guise.
really. Not
Yeah,
they haven't owned ECI long enough to.
yeah,
Well, they should by the time they'll have owned it for over 6 months by the time they
yeah,
report. So
yeah.
we shall see.
James,
The other
I know
thing that grabbed me,
you've been looking at BAE as well, a key defence stock in the not just the UK market, but obviously globally as well.
Yeah, I
There's
think
been a
it's
really bumpy ride for defensive stocks this year, up and then down and then up and then down. What have you found?
yeah, just the record order backlog. Obviously, very sad for the world, I guess, but sort of good for profits. It's a bit one of those sort of situations.
Yeah,
Record sales, order book is booming, and management think that there's a new era in this kind of defence spending backdrop. So they think they can keep growing the business for a long while yet. So it's
yeah,
yeah, and it's a very sizable stock, isn't it? FTSE 100,
yeah,
definitely worth
absolutely.
following.
Yeah, absolutely. Something that caught my eye as well, and might interest you, Ian, in particular, a company called Equipment Share, and it was an IPO over in the US quite recently this year. It's in the market of renting out and leasing out construction equipment. So it rang the bell about Ashtead's kind of business
Ashtead,
model.
yeah.
I just wonder if that might be something to have a look at further down the line to see whether or not. I mean, its shares have kind of flat. They've done okay, sort of up about 4%, I think, since the IPO. But it might be something that UK investors might be interested in because Ashtead has been a storming success over well more than a decade at least.
Yeah, it's a really high quality business, very high returns on capital employed,
Yeah,
and been a very good rising dividend payer as well. If you had a dividend heroes in the market, it would be one of them rather than just in
right.
investment trusts. It would be
Yeah,
one because it's raised its dividends so often and so consistently.
yeah,
Yeah.
yeah. Just
I
a
was going to
final
say
point as
another.
well. I just thought it captured my imagination. eToro after hours on Tuesday had its results, and they were very strong. And there were good numbers in terms of new active users, etc., etc. Now, this, of course, is a trading platform that a lot of UK investors will be familiar with because it has a big UK presence. I
Mm.
just wondered personally if there was something you could look at their figures and read into anything into the health of the UK investor or just retail investors per se. So I had a quick look at Charles Schwab. Again, they've got a UK presence. At AJ Bell, which is the only one big hitter on listed on the UK market now, and their share price has been pretty poor this year. So it does seem that eToro seems to be capturing something that those other platforms just aren't capturing at the moment.
Interesting. I was going to say one deal that struck me in the UK, interesting this week, is Custodian REITs. Now, not a lot of people, we haven't talked about REITs for a long time. They
Yeah,
are great income vehicles for people who want a steady, sustainable level of income. And Custodian has hit on this really rich seam of assets owned by family offices. Now, if you think family offices, when the head of the family decides that they're going to retire or they want to go and play golf or they just basically they want to pass the business on, quite often younger family members either don't have the skills or the interest in maintaining and running a property business. I think you've got to be really, really passionate about it.
Yeah.
So there are a lot of family offices out there with property businesses who are looking to sell, and Custodian seems to have hit this, it's done this brilliant deal with this company bought £36 million worth of assets. They get the assets. The family gets shares in Custodian in exchange.
Right. Yeah.
So it avoids all the tax issues, all the
Right.
succession issues, and the people, they keep the managers on
Yeah.
that were running these assets because they've got the skill set, but it's a really neat way of avoiding
It's
debt
keeping all the
duties and
vested
inheritance
interests
and all sorts.
under that umbrella, isn't it? So, I mean, everyone's got an incentive to drive the progress in the business and drive the share price higher.
Well, they have, but if the younger family members want to hold on to the shares, they can. They want to keep their interest in the business,
Yeah.
they can. Equally, they can
just sell them out.
and there's no capital gains on it.
Yeah.
So,
I mean, you say property, is it more commercial or more
it is
residential,
commercial
or is it a
property,
mixture?
yeah.
It's commercial.
Yes. Now, Custodian specialises in smaller lots that big property firms won't go for. So, James, you'll be interested. They own a couple of Virtue car showrooms on
yes.
the north side, just around the northern bit of the M25. We're talking Gerrards Cross, Beaconsfield Way. They own an M&S Simply Food outlet, a fitness centre, a couple of retail assets as well. And because they're typically smaller lot size, big firms aren't competing with them for them. But as I have to say, I think this is a great strategy. And Richard Shepherd-Cross, who I was talking to yesterday, said, watch this space because there's a lot more potentially in the pipeline.
So the message to our listeners is also watch this space. Then, I mean, it's an interesting name. It's not one I'm familiar with, although I'm not a property expert by any means. But maybe it's a new name to many of our listeners. So something
it might be, worth
akin to
watching.
watch this space. It might turn out to be a very interesting investment down the line.
Yeah.
I suppose we better wrap up there, chaps. As usual, everyone, if you want to get in touch with us, any comments about the podcast, any topics you want us to discuss, editorial@sharesify.com. I think we'll leave it there. Thanks, chaps. See you next time, everyone.
Thanks, guys.
Speak soon. Cheers.